Bridge Street Capital Partners is a Sydney-based corporate advisory firm that specialises in equity capital market transactions for small-cap companies listed on the ASX, primarily in the mining, energy and tech sectors. If you are a Section 708 sophisticated investor and would like to be on Bridge Street's distribution list for their upcoming capital raises, please send them your details via an email to invest@bridgestreetcapital.com.au and mention the BIP show in your message. Now, on with the show. How are you now? Broadcasting from the VFS studios at Northbridge in Sydney. You are listening to the all-new BIP Show, Season 5, Episode 2. Don't forget to hit subscribe and rate us wherever you get your podcasts. And a reminder that all the financial information in this podcast is general in nature only. Speak to a professional advisor about your needs. That's what I do, amazingly and coincidentally. My name is James Whelan, Investment Manager at VFS Group. I skipped Davos to be here. It's really good. Someone else who also skipped Davos to be here, I'll introduce him in a second. Before that, the date is the 15th of July, 2022 AD. The time is 10:08 a.m. I've got the market switched off, so I don't even know if it's up or down. And I am joined here, first off, I've got a couple of guests, but first and foremost, another investment advisor over from South Australia, and he does help our South Australian quota, which I'm required to maintain. Legally speaking and contractually, I'm obligated to have a South Australian on the show at least once every 3 weeks. I'm joined today by HLM Investments, is Heath Moss. Heath, how are you now?
Very good. Thanks for having me on, mate.
It's good. Now, quick update on the markets, mate. Do you feel a little bit more comfort with what's going on at the moment in this in the current time?
Yeah, I was. I've moved from really cautious with how we're deploying our money to slightly more bullish and feeling like coming into the end of the year that we're going to see a turnaround in markets. I think they're trying to put in a bottom now. The last couple of nights on the US markets, we've started off quite poorly and ended up basically flat. So I think we're looking pretty good coming into the end of the year. And China and the rarity coming out of China is getting me even more excited.
Yeah, no, and it seems like a little bit more comfort sort of going into it. However, earnings season has started. We're probably going to see, I mean, everyone did expect to see that we're going to see margin compression come in, and then we're going to start to see a revaluation to the downside. Now the question comes up, has that been factored in already because everyone's been talking about it and the market's ready to be buying on opportunities like that? Or do we still have that next leg down? Time will tell. I hate to be that guy to say it. Now, maybe to help us navigate this one a little bit more closely, but also I want to have a really good focus on Europe and the energy crisis that's there that we've been talking about now for almost a year since Nord Stream 2 was finished in probably, I think it was about September or October last year. And then that started all of this situation that's going on now. Is today's main guest, not superior guest to you, Heath, I'm sorry, but our main guest is an old friend of mine and one of the biggest influences on my career in financial markets. He's a great friend of the show and of mine, formerly of, I'm guessing here is at Rothschilds, I think, there, and Hedge Funds Australia as well. A very smart fellow and an all-round nice guy. We are pressed for time, so I can't give him the introduction that he deserves. But author of The Payne Report, Jonathan Payne, how are you now?
I'm very well, James, and thank you very much for having me back on your show.
That's good. Now, the last time that you were on that, it was a really cracking show. We went around the grounds in a few minutes, every country, every market that we could cover that was worth covering. This time, we're just going to really focus, if we can, on the energy crisis. Your recent notes have really focused on what's going on in Germany for a good reason too, and we'll get into exactly why that is. Firstly, here I've got a note here. You know Joe Weisenthal from Bloomberg. Someone posted a tweet that he did in October 2017. Quote, Germany is producing so much renewable energy, homeowners might get paid to use electricity this weekend. And that was in the last week of October 2017. How much has changed in not even 5 years to now potentially people, well, they're setting up public spaces for people to get heating in Germany. And that's a real tragic situation. So we're going to talk about that. We're going to talk about Nord Stream if we've got time to get into. But I was wondering if, let's just start at the European energy situation, and especially the German situation. Do you want to give us a brief overview of what you're seeing over there and then we can talk about sort of the downstream effects and where that's going to actually impact markets after that. Heath, mate, feel free to jump in anytime you want. I know your questions will probably be more cutting than mine. So, Jonathan, mate, over to you. Germany.
Well, thank you, James. As you say in my weekly pain report, I have been highlighting the gravity of the situation in Europe, and clearly, I think everyone now has finally realized that Europe today faces a energy emergency, and I've now more latterly changed that somewhat to a potential energy catastrophe. We know the context to this, but just to bring it into the here and now, and the stark reality of what is happening in Europe. We know, of course, post the invasion of Ukraine by Russia, the reduction in particularly natural gas supplies into Europe has amplified an energy crisis. And for a little bit of short-term context, we need to remind everyone that Europe was already entering a period of potential energy emergency prior to the invasion. And the Russian invasion has simply accelerated and amplified the quantum and the degree and the gravity of it. So what I'm seeing now is we have electricity prices in Germany that have just been multiplying.
Yeah.
And my arithmetic's not very good, James, but I mean, if I said that German electricity prices were up 7-fold from their average price in 2019, I probably wouldn't be too far wrong. And similarly, also, natural gas prices are up so many multiples. The bottom line is this. I'm hearing reports out of Germany. Now, Germany, as we all know, is one of the great industrial champions of the post-war period. I mean, this is one of the world's finest, highest quality manufacturers of capital goods, one of the world's great export champions, and Germany is unambiguously the locomotive of Europe. And Europe, of course, is the second largest economic regional entity in the world. In fact, it's just about the same size as the United States in terms of economic, in terms of GDP. So what's going on in Germany? And I'm hearing that up to or potentially 25% of the manufacturing sector in Germany has weeks, not months, before it has to start shutting down operations. Now, yes, that is a staggering. If that's anywhere remotely true, that is staggering.
That's depression level sort of areas.
That is exactly right. So people kind of talking about, are we in the future going to have a recession in Europe? Well, Europe is in recession. The question now is the depth and the duration of the recession. And much of that, of course, is contingent upon energy supplies and the cost, moreover, of that energy. And that then brings into the conversation, of course, Nord Stream 1, which, of course, runs under the Baltic. Mm-hmm. And we know that's just gone into a shutdown period for maintenance from about, I think, the 11th of July.
It was the 11th,
we're hoping that it reopens on the 21st of July.
There's a bit of that, isn't there? It's for repairs. Are they going to keep it? Are they going to keep it closed, or are they going to bring it back on and help them out? So,
well,
what do you think?
I actually have had some conversations with people who know a lot more than I do in terms of the energy system and infrastructure in Europe. And one of the things, James, let me note for the record that I've spent months and months now trying to dig into the complexity of the European energy markets, and the more I've learned is the more work I've done, the more I realize how little I know. It's quite frightening how complex it is. But the bottom line is I have had conversations with people who say that the Russians won't completely shut down Nord Stream 1, and they're hoping, obviously, that it reopens on the 21st of July. But of course, Putin, has his hand on the tap, and we know that gas supplies via Nord Stream 1 have been reduced significantly in the last few months, and as a consequence, we've seen energy prices rise the way that they have. But the bottom line is we're in an incredibly dangerous point in time here in terms of the history of Europe, and we've got to stop this kind of, oh well, there might be a recession at some point in the future. I mean, every single data point that I look at in Europe tells me that we're already in recession. And of course, that recession, James, is being accompanied by, very, very high levels, very, very high levels of inflation. So all eyes on the 21st of July. Let's hope and pray Nord Stream 1 is the gas flows through it on the 21st of July. And that, incidentally, James, is the day that the European Central Bank is meeting. And we're told they're going to raise rates by 0.25%. And I don't know if you want to get into the ECB and the catastrophic management of monetary policy in Europe, but we can go down that rabbit hole if you want. But yes, I mean, what I'm seeing and hearing out of Europe is very, very grave indeed. And the impact on the manufacturing sector in particular is noteworthy. So that means to me that GDP forecasts right across Europe will be revised down into, and in fact, we'll see an actual recession. And that means also EPS, earnings per share numbers in Europe are way too elevated, and they'll be revised down as well.
So what was there I mean, sorry, I'm not going to ask a leading question. In your note recently, which I would ask everyone to, if they can, subscribe to and check out, because it's always got some beautiful insight in it. You mentioned a specific case. I always like to have real cases on this show. Real people talking about real things. Was it the specific case that you gave, the case example with regards to German manufacturing? Do you want to go into that? Because that's fascinating.
Yes, absolutely. BASF is one of the largest, in fact, the second largest chemical company in the world. And they have this absolutely monster plant in a place called Ludwigshafen. Apologies to any German listeners if they are there. I'll say
right. 10 years of German at school, Jonathan. That sounded okay.
I did it. I did at Ludwigshafen. And this is just a remarkable chemical plant. Within it, there are 60 miles of tar roads. And you've got parts of it, and I can't remember all the technical terms because I'm certainly not a chemical plants expert, but there are facilities within Ludwigshafen where, they obviously, producing chemicals, etc. That each one of the I can't even remember the name of it, James. You might have read my note. But the actual plant, one of the actual systems they have there is the size of about 13 soccer fields.
Yeah.
So we're talking about
the steam crackers. I think that you've got
steam crackers. Well done, James. I was struggling. I was trying to. Regretfully, I actually. That's not in my notes, but yes, the steam one of the steam crackers, and in fact two at Ludwigshafen, is the size of 13 soccer fields. I mean, so just imagine the scale of it. And as I said, 60 miles of roads within that one plant at Ludwigshafen. So we're talking about an operation that has global ramifications. I mean, what happens in Germany doesn't stay in Germany. It has consequences for the entire global economy, particularly a chemical facility the scale of Ludwigshafen which BASF runs. So these are the kind of real world manifestations of the extraordinary increase in the cost of energy. And the chap who runs BASF is actually on the record saying that if these energy prices are sustained, they will actually have to contemplate shutting down the Ludwigshafen chemical facility. And as he said in the interview, that's something unimaginable that they couldn't have even imagined just a few months ago. So that's the kind of reality of what we're seeing.
Jonathan, just quickly, and I don't want to put you on the spot here, but we know that Russian gas supplies about 9% of all European energy at the moment. And since we're talking about Germany in particular, why are the Germans so against the nuclear option? They've got the plants there and they're continuing to shut them down. Do you know why they're so against keeping them running and helping prolong this shortage that they've got going on?
Well, actually, Heath, this is a critical point. If you remember, it was actually Chancellor Angela Merkel who had all the nuclear plants shut down, and I'm pretty certain that was following the tragedy of Fukushima in Japan, which James will know. He's very good at history. I think it was 2011 or thereabouts. We had the tsunami and the disaster, the nuclear disaster at Fukushima in Japan. I think it was 2011. And then following that, Chancellor Angela Merkel then started shutting down the nuclear facilities, the nuclear plants in Germany. And don't forget also, the Green Party in Germany is incredibly influential and powerful. In fact, they're actually now in a coalition with Olaf Scholz, the new Chancellor of Germany, and the SDP. So a very powerful voice in German politics has been the Green Party. And the Green Party basically also put a lot of pressure on Angela Merkel at the time to shut down nuclear power. And as you know, Heath, the French, of course, have maintained their nuclear power plants. And that is one of the reasons why the French are in a better situation. I mean, Germany has made every energy mistake it would be possible to make in the last 15 years or so. They became hostage to Russia, very reliant on natural gas supplies through Nord Stream 1. They shut down nuclear, and they basically also pretty much look to shut down all coal power, coal-fueled generators. So they're now having to reverse much of that. And in fact, I think overnight, and I haven't had time to check the story out yet, I saw a headline that the Japanese are looking to start up their nuclear reactors again, because of course the Japanese shut theirs down following the Fukushima tragedy of 2011. So basically, the Germany, as I said, has made every mistake possible, and now they face this new, very, very stark reality, and they're very, very much dependent on what Vladimir Putin does next.
Yeah, and we've all seen a video of Trump warning the Germans about exactly what was going to happen if they kept on going down that road, and the German delegation of whatever it was he was speaking at was laughing at him with his warnings about how controlled they will be by Russia. It's phenomenal, and you got to give him credit that Trump told them exactly what was going to happen, and here they are, and but we can talk about what is happening and the situation, how bad it is. Maybe if we could just sort of freestyle this one, how do we see this shaping energy policy going forward? Now, I know that there's actually, I will note this as well. There's a fellow on Twitter that I will post about, and I've actually just lost his name. Oh yeah, Pascal LTH, Pascal LTH. He's done some great analysis on exactly what's going on with regards to the stockpiling of gas. So the situation that came up last year, they literally just didn't have enough stockpile. So there is now a requirement for all EU countries to have at least 80% gas stockpiled, 80% of their capacity to be stockpiled by November, which is great. I'm pretty. It means that they just need to get enough gas coming into their country to actually be able to stockpile it. That's a different situation. However, they need to be at 80% capacity by November, which is great. There's another a law. This is a pretty obscure thing that I actually didn't know about. The 2017/1938 regulation, an EU regulation, it came in 2017 in October to talk about that countries have 3 stages of warning, and one is early warning, and then there's alert stage, and there's emergency. As it is now, there's only a few countries that have got into that early warning stage, and there's one country that's gone into the alert stage. That's Germany. Now, if you go into the third emergency stage, it means that you can basically go all bets are off and go into sort of like a wartime situation. Don't associate that with Germany, but go into a sort of a panic situation where, you know what, we can now bring on coal, we can ration, you can do whatever we can do, whatever we have to do, and it's sort of you can bypass a lot of EU regulations as well to be able to get yourself back on track. I think that potentially, in my view, that calls of it might not be as disastrous as maybe we're making everything look out as it looks for. It's just the wrong time of the year for people to be cut off from gas in businesses, and maybe at this stage of the cycle, it's definitely not a great time for companies to be on their knees without anything to power their plants. Do you see that energy policy might actually be reshaped by this, Jonathan, going forward? I mean, where does the next few years take us?
Well, James, this is an incredibly perplexing and complex conversation to have. I tend to try and focus on the here and now. And when I see economists around the world, kind of saying, oh, yes, Germany's in a spot of bother and, et cetera, et cetera. And I look at kind of GDP forecasts for Germany for the balance of this year, and they're still positive. I look at that and go, they're dreaming. GDP is going to be negative this year in Germany and pretty much right across Europe. Now, will the emergency that we're in, and I think it's bordering on catastrophic, incidentally, will clearly create a different conversation and debate around energy and the transition to a clean, zero emission future. And I think the scale of what really regrettably might actually happen in Europe will certainly get a political momentum to effectively say, look, okay, fine, that's our long-term vision. That's our long-term strategy, namely the zero emission strategy down the road. That's decades into the future, and we need to manage the transition. The here and now is we don't want people dying from the freezing cold this winter in the Northern Hemisphere in Europe. And hence, we have just in the last few weeks seen members of the Green Party, emphasis on the Green Party in Germany, saying, you know what, we're going to have to fire up the coal stations again.
Get the coal going.
To get us through the winter, because we can't any longer assume that Putin will supply sufficient natural gas to get us through from here through the winter and into next year. So they've had to, look at contingency plans. And I mean, there's so much chatter and conversation around this topic. But at the end of the day, politicians, one assumes, in a democracy, will be sensitive to the daily reality of its electorate. And therefore, right now, they need to get their hands on every available fuel source to enable them to get through the next 6 to 12 months. So anything that they can burn and provide some form of energy will be. I've even heard reports in the last 24 hours that they're saying, look, at the end of the day, they're trying to get households to go out and get as much wood as they can and burn wood for heat, et cetera, et cetera. In the Bundestag, which is the German parliament, they've already turned off the hot water. And there's even proposals that the German politicians should share showers with one another, and for no longer than 5 minutes. So I'm hopeful that we might actually see that as well.
How do you think that Angela Merkel? I'm going to call her Angela. I'm sorry. How do you think that Angela Merkel will be viewed long term? How will history view her? There's some people. I mean, Gray Connolly has a pretty critical view. If anyone who follows Gray will know what I'm talking about. He's just a bit of a mind on these sorts of things, and he suggested that potentially she's a Soviet plant in Germany based on the policies that have happened. It's difficult to disagree with that.
James, you don't want me to get into this, do you, really? I mean, this is who knows who'll end up listening to this. I'll just say a couple of things. I mean, obviously, we're all very familiar with, I'm afraid I will call her Angela Merkel. Go on. Chancellor Angela Merkel. And obviously, we've all studied her for a very long period of time. She was, the longest serving chancellor. So, yes, there was an enormous amount of commentary and criticism that Angela Merkel basically left Germany as hostage to Russian energy, effectively. Yeah. Now, her origin, as you know, is from East Germany. Scientist by training. And Vladimir Putin, of course, was based in East Germany, as we know. Fluent in German, And the stories about the kind of relationship they had is quite in of itself quite interesting. The bottom line is there's an element of the German establishment, whether you call it that, the industrial or political establishment, that have for many, many decades had very, very, very close ties with Moscow.
Mm.
And I don't think there's no secret in any of that. Former chancellors, in fact, sit on Russian energy boards.
Companies, that's right. Yes.
Gerhard Schroeder. So clearly the Germans felt that Russia was a reliable energy partner. And I do believe that for the German industrial and political establishment, Putin's activity and invasion of Ukraine was an absolute lightning bolt shock and surprise. And, so much has happened since the 24th of February, and I followed events in the Bundestag there with Olaf Scholz delivering that speech where he basically ripped up the entire post-war German foreign policy and defense policy strategy. And you can see they were taken by, and it was a massive shock to the Germans that what happened with the full-scale Russian invasion of Ukraine. Mm. But as in life, James, the cards, you have to play the cards that are on the table, and the cards on the table right now is that Germany is enduring a severe energy emergency with catastrophic ramifications for industry and the manufacturing sector. And we don't know what happens next with respect to the flow of gas that is permitted through Nord Stream 1 post 21st July. But what we do know is that many German companies are suffering the historic and epic rise in energy costs and are going to be in severe strife, not in months to come. They are in strife now and are looking to actually significantly curtail production, if not shut down production in the very, very near term. So I'm afraid I'm going to have to call it the way I see it.
Yep.
And the sad reality is that Germany faces or is in a very severe recession. And then we know what happens if I'm right about that, then clearly I'm afraid the European equity markets are going to remain very weak and decline further. And moreover, equity analysts are going to downgrade earnings per share estimates. And I've said this about the United States as well. We're going to see an avalanche of downgrades to EPS estimates in the United States and also in Europe. And then throwing in on top of all of this, of course, is we have a very, very, very strong US dollar. And the opposite end of that is a very, very weak 20-year low in the euro. And we're hovering as we speak at parity with the US dollar. And we're on the doorstep of Christine Lagarde, president of the ECB, raising rates for the first time. I think, is it since 2011 or thereabouts?
I actually couldn't tell you. It's definitely a long time, though.
It's been a long time.
Yeah.
Look, I've said it before in my reports, and I've said it certainly in my speaking engagements in the last few months. I have this phrase, mirror, mirror on the wall. Who is the most incompetent central bank of them all? And it's a very crowded field. This is a very, very competitive contest. But sadly, mirror, mirror on the wall, who is the most incompetent of them all is unambiguously the ECB.
Yeah. That would be it. Heath, I think you had a question, and then I'm going to have to wrap it up because we've been talking for too long.
Yes, Jonathan, James, just wanted to get your thoughts on earnings in the US. I think current forecast for Q2 earnings seasons of a rise of around 4% in earnings. Where do you see earnings moving forward into Q3, Q4, and possibly 23 for the US in particular? Because obviously we all know earnings estimates are quite bullish still at the moment. How much slowing, or how far back do earnings go if they do head into a recession, in your opinion?
Yeah, I've got a EPS for the S&P 500 of about $200, which is significantly below the market.
Yeah.
And then I put a 15 times multiple on that, and I come up with 3,000 as my projection for the S&P 500. So about another, 17 or 18% further down from here. So that's obviously predicated on my view that America goes into recession. In fact, I'm seeing recession in much of the developed world. So I've got a $200 EPS on the S&P 500, which is significantly lower than where the consensus is.
Oh, that's definitely amazing. Heath, have you got anything else? Otherwise, I'm going to have to shut it off.
No, just mainly getting excited about China again, their investment in infrastructure. It looks like their second half of this year will be like the economy starts turning its wheels again, a move away from zero COVID to more spot fire management and living with the virus. $1.1 trillion to be invested in infrastructure in China towards the end of the year. I read an excellent note yesterday about their investment in green infrastructure, and it looks like they'll invest about $1.9 trillion in green infrastructure up until 2025, which will be about 16% of total infrastructure investment. So a lot to like to come out of China, and of course commodities. And I think the recent sell-off in commodities presents an absolute excellent opportunity longer term, a gift to investors longer term.
Jonathan, do you agree with the commodities play? A nice, big, chunky, long position for a generational buying opportunity? What do you think?
Yeah, I've been pretty bullish on commodity prices, but the trouble with the commodity story right now is that if we're staring at the whites of the eyes of a recession, all things being equal, that tends to weaken commodities, as we know from history.
Yeah.
But having said all of that, and I follow the oil markets very closely, I must admit, that the physical underlying market is still relatively tight. But the financial market, if you look at we look at the futures market for crude oil, we've seen this really, really precipitous decline. But yeah, longer term, I suppose I've got a bullish bias on commodities, but I'm tempering that at the moment, given the depth of what I'm seeing in terms of economic activity in places like Europe. But I get the supply demand dynamic being broadly supportive of commodities moving forward, and as Heath has very, very accurately suggested, if China, and it's a big if, China can get itself out of this ridiculous zero COVID strategy, then clearly China coming back online vis-a-vis on the demand side is very positive for commodities moving forward.
Yep, no doubt on that. Now, on that note, we're going to have to close it off here. I'm going to shut it off like Nord Stream 1. There you go. That's the best segue I've ever done, I think. There you go. Thanks for joining us today, Jonathan Payne, author of The Payne Report, and I look forward to catching up soon.
Thanks, James. Thanks, Heath. Bye-bye.
Yeah, thank you. Bye.
Cheers, Heath, for joining us. Don't forget, I don't know, all the stuff that I usually say at the end of the show. Subscribe, rate, leave a review. You can find us on iTunes. You can find us on all the other places as well. Twitter, at @the_BIP_show. I did a great survey last week. I ran a survey, and yes, it did turn out that the average man on the street could not have known that the RBA had those caveats behind their saying that they weren't going to raise rates. So, yeah, I think that the people have spoken, that maybe the RBA didn't message that well enough. I'll run another survey today at exactly when we should be buying commodities. Or, you know what, I'll run another survey and we'll ask the question, will Russia turn the taps back on? There's the survey that I'll run this time. I've got a website, check it out. Whelan Capital is where all this stuff is kept. I'll put some documents on there that we've got and some links to other things that are there. Jonathan's on Twitter. Heath is on Twitter. I'm on Twitter. You know who we are. Just look it up. The show is produced by Glenn Fiddick, and we'll catch you next time. Thanks a lot, Heath.
See you later, mate. Have a good one.
Thanks, Jonathan. Have a great day.
Thank you, James. Thank you, Heath. Bye-bye.
Bye.